Good afternoon, everyone. My name is Omolabake Olagunjo. I'm a senior program associate with the Creative Economy Practice, and I am based at the Lagos office. You are welcome to the Fashionomics Africa Accelerator online program. Today, we'll be covering understanding your taxes. Kindly note that translations are available in English, French, Portuguese, and Arabic. We request that you look for the round interpretation icon at the bottom of the screen to select your preferred language. Welcome to today's session. And while you wait, please turn on your cameras if you can, and share in the chat what you are looking to get out of the session. Before we start, here are some ground rules. Switch on camera if you can. Use the chat box to ask questions. Raise hand if you want to say something. What we discuss here stays here. Mute your microphone unless you want to speak. Participate actively. Give space for others to participate. Please ensure that your Zoom name matches your registration name. This is for the purpose of taking attendance. Attendance will be taken anytime during the session. So again, we ask you to ensure that your Zoom name matches your registration name so that you are not marked absent. Meet our facilitator for today. Chijioke Nwabrute is the in-source solution for tax IST leader for West and Central Africa, the Africa Oil and Gas Public Sector Tax Leader, PwC Nigeria. He also leads the government and public sector practice for West Africa and has worked on several transformation projects for different state governments in Nigeria. Prior to joining PwC, he was a regional executive and tax director for Sub-Saharan with oversight in all General Electric businesses in the sub-region. He also worked with KPMG, where he led the Gulf of Guinea tax desk. Chijioke holds a BSc in accounting. He is a member of the Institute of Chartered Accountants of Nigeria, ICAN, and the Chartered Institute of Taxation Nigeria, CITF. He was also the Deputy Dean Direct Tax Faculty at Chartered Institute of Taxation, 2014 to 2015. We are excited to have you today, Chijioke, and we look forward to a great learning session on understanding your taxes. The floor is yours, Chijioke. You are highly welcome. Good afternoon, Chijioke.
Good afternoon, Labake. Can you confirm that you can hear me okay?
Yes, I can hear you well.
Okay, good. Good afternoon, everybody. Really glad to be here. I think just to also show that I'm not only a boring tax accountant, I am also a filmmaker and a film producer. So just to try and score some cool points with you guys, because I understand that, you know, what we have in the room are, you know, fashion companies, designers, garment makers, fashion photographers, and the, you know, the training schools and the rest. So I think this is a very, you know, I mean, the right kind of audience to kind of engage in this kind of conversation. And I'd like to say thank you very much to the AFDB and the creative practice that have kind of put this together. And just without wasting much of your time, I think we can jump in to the presentation if my slides would move. And yeah, so thanks to CC Hub, Creative Economic Practice, and the syndicates, you know, for just kind of helping putting this thing together. So essentially what we'll be looking at today is introduction to taxation, an introduction to tax planning and compliance, and we'll look at trends and future developments in the tax environment. What I'd like to tell this group is this, right? Our conversation will be very easy. I do understand that tax is something that can be quite confusing for people. But unfortunately, tax is a necessary evil. And we don't have a choice but to comply, because they say the two things that are certain in life are death and taxes. So let's dive in. I'm just gonna keep it as simple as possible and hopefully note your questions so that, at the end we can then talk about practical issues, fashion professional. So some of the learning outcomes here, right? Now, while I do understand that this is a multi participating audience, I'd like to just chat a little bit about environment in a country like Nigeria. And the truth is, if you do understand a complex and sometimes frustrating tax environment like Nigeria, trust me, you can anywhere else, So we'll just kind of have a quick highlight of this. And then we'll look at the compliance obligations for you as a fashion, and we'll look at the opportunities and challenges that are arising from these compliance obligations. Then, as you know, right now, I do know that, there's potentially the next big thing in Africa fashion that's in this room now. And what I'd like to say is, you can't, it's never too early to start looking at yourself as a big company. That means while you're doing every other thing in preparation to when you become that really massive conglomerate, you also need to include tax planning in your strategy for growth. Because if you don't include tax planning and compliance at your level now, when you really become really big to the point that it becomes significant, you'd find that you would struggle. So it's always good to start with a compliance mindset today. And then we'll just quickly look at the trends and likely future developments from a tax environment across the continent. So this is my outline, because I've kind of talked about what I hope to be the learning outcomes. And I hope at the end of the course, we can also look at those learning outcomes and be sure that we've touched on them. Unfortunately, we don't have a lot of time to also talk about expectations, but hopefully during the Q&A and session, we can also look at your expectations and how we've met them. So my outline today would be a quick introduction to taxation, looking at the Nigerian Revenue Authorities and tax administration. We'll take a quick look at tax regimes, and then we'll just dive into tax planning and compliance. And then the use of consultants. Of course, that is one thing that you must realize, that it's always good to leave you guys to focus on the business of fashion, while we consultants focus on how to protect you and ensure that you have the most optimal tax obligations and tax payments, so that you can create value for yourselves and your shareholders. And then obviously we'll take questions and answers. So I've talked about, there are two things that are, definite in life, which is taxation and death. And, when you think about it, it's an obligation that you have to the government, and it's the government that on its own uses it as a basis to fund its expenditure. So that's why the first thing is, it's a payment to government. Essentially, government uses taxation as a basis to raise revenue for the general good. So central governments, local governments, so depending on the countries, because some countries have the central government and then they have the states. Some countries have central government and they have provincial governments. So depending on the government that we are speaking to, that is the one that you would pay the tax to. Now, some people say there's no direct return of value and it is not directly related to a service. And that is correct in the sense that if I pay a tax of $1,000, I cannot directly say that that tax I'm paying is what is paying for the road that is right in front of my house. That tax I'm paying is part of a larger pool of funds that will be used to build infrastructure, provide health care, and other value-adding services for the general populace. So that is why we say there's no direct return of value or directly related to a service they're performing to you. It's actually for general application, which is why one of the things we've always said, and I'm hoping that I can also get some advocates from here, is the trust equation, which is government on one side, we are paying our taxes. Our expectation is that you live up to your side of the bargain by providing us with the right infrastructure and the right amenities and services for the common good. It's mandatory. It is not voluntary, and there are penalties for non-compliance. I know a lot of people would say, in my country, there's a lot of corruption, government officials, they live a larger than life, type of lifestyle, feeding on, the taxes that we pay. Unfortunately, even if we have that situation where you are aware that, there's all that corruption, it doesn't change the fact that you still have an obligation to pay tax. The only thing is that just make sure that you vote out those people and put in the right people that would, manage your commonwealth coming from the, arising from the taxes in a manner that will ensure that you get the best value out of the taxes you pay. And it's more than just corporate income tax. There's many other taxes that people pay. But really, you'd find out that the major taxes you pay is the tax on your income or the tax on your profits. But there are also other taxes as well, like a tax on consumption. Many of us, who go to restaurants or go and have a drink somewhere, you'd find out that you pay either a value-added tax or you pay a consumption tax. So there are different taxes. There are sin taxes, like in some countries where they, brought in taxes to curb a certain type of behavior. So for instance, the sugar tax is where they impose taxes on the soft drinks that you take, and those drinks, the sugary drinks, if the whole essence is to reduce your consumption of those drinks, or the taxes on tobacco. There's even, some countries that tax luxury goods. So if you can afford a luxury good, then you should be able to pay an additional tax on it as well. So it's more than just corporate tax. There are taxes on consumption. There are taxes that are, or there are levies that are driven by maybe the size of your property or the size of your, of a transaction. Okay, now, let's jump into the type of taxes. So there's the direct tax and the indirect tax. So what do we mean by direct tax? Any tax that you feel the impact immediately and you cannot pass that impact to someone else is a direct tax. So for instance, your personal income tax, or any tax you earn on your income, it's borne by you directly. You can't pass it to any other person. Same as companies, if you bear a tax on your profits, you can't pass that tax to someone else. So you are the direct, you feel the direct impact of the tax, you cannot pass it on. But for the indirect taxes, you're able to pass it on. So for instance, value-added tax, if I buy a good, there's value-added tax on it, I sell it, I also add my VAT until it is the last consumer that bears the incident of value-added tax. Same with customs duties or excise. It also gets passed, I mean, for customs, you pay the duties on these goods, and then you're able to kind of transfer it in terms of the cost at which you sell. But for companies generally, one thing we've also found out is that where you have, a tax on your profits, we find out that companies tend to say, do I then increase my prices to be able to then, take out the impact of that tax? But you find out the more profits you make, the more tax you pay. So that's why there's a direct relationship to that, and you are the one bearing it. So it's not like you're passing it across. But for VAT, I can decide to increase my price and increase the VAT that someone else is going to take the impact of. So here are some quotes that we have on C. Is that, I'm sorry, I'll just need to review it. Good. Why do we have taxation? I've talked about this before, to enable government raise money and apply this for the benefit of the citizens. And if you look at a quote from Franklin Delano Roosevelt, who was a president of the US a really long time ago in the 1930s, he says, taxes, after all, are the dues that we pay for the privileges of membership in an organized society. And you'd ask the question, why is there a need for taxes at a time like this? And you see that it allows us to generate revenue for the benefit of the nation and its people. So, at times, if you reduce, you see the government uses taxes as a way to either expand or contract the economy. And you find out that at times we can decide that, just to encourage spending, let us reduce taxes. And you'd find that tax rates are reduced just to allow people to have the ability to spend. I know many of your countries during COVID had a lot of tax reliefs, reduction in taxes, or even waivers of taxes, because everybody was aware that during COVID, it was a difficult time for the world, and people had, a negative impact on their income. And many countries decided to go ahead and have some kind of palliatives. And those palliatives came in the form of tax breaks, reduction in taxes, and the rest. But at times too, if you feel that there's excess liquidity, excess expenditure, you could decide to increase the taxes and mop up some of that, especially when, there's a lot of consumption. You can actually increase the taxes to kind of, address that behavior as well. And if you look at it, using a country like Nigeria, you find out that you have a significant, of the country and other expenditures that's coming through things like debt servicing and capital expenditure and things like the recurrent expenditure. So if you have a country where, and I'm using Nigeria, where they said the expected revenue the government is going to get is about somewhere in the range of 10 trillion. 10 trillion naira is probably somewhere in the range of about $20 billion. And your expenditure is twice that. Your expenditure is about 20 trillion, which is some aggressive taxing of the citizens to be able to bridge that gap. Now, the question you would ask is, do our governments collect enough taxes today? I would say no. Maybe the more advanced governments like South Africa have very good tax collections, but many countries in sub-Saharan Africa do not have good tax collections because many of us are in what you would call the informal sector. And the informal sector is decided to set up a business name. Can you all hear me? Okay, I can sell the clothes on Instagram, I can sell the clothes on TikTok, but I have no registration. So all the income I make from selling clothes on Instagram, when you feel like they're trying to raise taxes, they shouldn't actually be raising taxes, but they should actually go and bring the people that are in the informal sector to come into the formal sector. So all of us that don't have tax registrations or we're not paying the right taxes, we should consider doing that now. And why do I say this? I use a country like the United Kingdom, right? And in the UK, what they did for people in the creative industries, which was, in film, fashion, and the rest, was that they took all the people that had tax registrations and looked at their tax history over the past few years. And what they then did was to say, you have contributed this amount of taxes to the government. Government is going to pay you a certain amount to allow you tide over this period of COVID. So because the government had the data of all the people that were paying the taxes, it was easy to do that. But if you're in a country like Nigeria, where you have a lot of people in the informal sector who don't pay taxes, what then happens? They don't pay taxes on their income. They might pay taxes on consumption. So if you want to buy something, you have to pay value-added tax. And you say you've paid taxes. You've only paid taxes on your consumption. You haven't paid tax on your income, the income you get from selling those things. Or if you are paying your property taxes, they ask you for your property taxes, or they ask you for your taxes on refuse and the rest, maybe levies on refuse and all that. Yes, you're paying on the basis that you're enjoying a service from government, but you haven't paid tax on your income, which is what you earn from selling those clothes. So if you haven't paid that tax, government doesn't have your data. And when it comes to a time when government needs to do something for you directly, maybe a direct palliative, they can't do it because you're not there. Or if you decide to pay less tax than you should. So that is why at times we ask the question, should government be increasing taxes, or should government find a way to ensure that everybody pays taxes, so that it's not that a few people are paying taxes and suffering while others are not. So one thing I want us to be clear on, and I hope that we can leave this place, is that we should pay the right taxes. I'll talk about why you need to pay the right taxes later in this presentation. So if you go a bit more into the details of why pay taxes, it is not your money. That is the truth. It is not your money. It is the part of your profits. Let me be very clear. The part of your profits that you pay as tax is not part of your value that you're giving to your shareholders because you're paying it to government. It is the law. It is required. It is a law of every country has a tax law. It is your social responsibility, and it's the ethical thing to do because it would help to fund development projects of the government. The only other option is to tell government, please go and borrow. Go and borrow money. We don't want to pay taxes. Go and borrow money. But just so you note this, every naira, dollar, kwacha, rand, Kenyan shilling, whatever currency you have, Ghana cedi, that you have your government take as a loan, is a tax that has to be paid in the future, because the only way they can pay it back is through taxes and levies. So let us be clear in our minds when we say, oh, government, go and take loans, go and find other ways to fund the expenditure. Any loan government takes today is a tax we have to pay tomorrow, because we have to pay the tax for government to be able to pay back the loan. That's why if you see that, that slide I was showing you, debt servicing that Nigeria is suffering today is the loans that were paid that was taken years ago, that you're still paying back the loan and the interest today. And if you don't have money today to pay the loan and interest, you have to increase your taxes to get the money to be able to pay your the loan interest. Now, moving on to the tripod of taxes, right? There's policy, there's legislation, and then there's administration. So tax policies, it provides a direction of government relating to tax and fiscal matters. Oh, I see a question saying, what about the natural resources? That's fine. You do know that government will get a share of its income on the natural resources, but the natural resources, there's a tax on it. So if you look at the petroleum tax or the tax, maybe in DR Congo, some of the taxes they are getting from their natural minerals, those taxes are the same. Those companies are paying taxes on those minerals, and that is how government is being funded. So companies come and exploit the natural resources of a country and pay the taxes based off of the exploitation of the natural resources. I just saw that comment and I thought, and that's a brilliant comment on natural resources. So there's also, so the policy drives the direction in which we will go, the government takes on tax and fiscal matters. So we can have a policy that we're looking to, bring some level of tax incentives to help increase increase the participation of people in a certain industry. So I know many countries have incentives, let's say incentives for the fashion industry or incentives for the music industry, because they are trying to encourage that industry to grow. So we can do that through tax policy. Then there's tax legislation. So the legislation will now give effect to the policy. If we then say, oh, our policy is really to drive increased investment in fashion, and what we will do is to say, everybody in the fashion industry, let's try and give them some sort of tax holiday. That means that they won't pay taxes maybe for the first 3 years or the first 5 years. What tax legislation then does is to now, you would now have to go to the parliament to now pass it into a law that says, if you're in the fashion industry, you don't pay taxes for the first 3 years. That is the law. Now, in terms of the administration, they are the ones that are now going to implement the policies and legislation, which is to say, for you to get that tax exemption, you must file your tax return, for instance. So you have to file a return of taxes to the government, and that is your compliance obligation. And the tax administration will come after you if you don't file your tax returns, because they are the ones to administer the taxes. Then obviously we say it's supported and strengthened by a tax adjudication system where you should be able to have an opportunity to dispute where you feel you have been overtaxed. And that is one thing that I need taxpayers to start looking at as well, to say, let us start driving a whole lot of pushback, especially when we feel that the tax authorities are giving us a tax assessment that is too high, or they have an unreasonable expectation that is not backed by either the law or by my operations. So please feel free to push back, object to tax assessments, and also, seek legal redress where possible. So I'm going to ask a question. Which one of these is illegal and which one of these is legal? So number one, tax evasion. Is tax evasion legal or illegal? You can just put your chats. You can put your answers in the chat box. I've seen an illegal, I'm seeing illegal, I'm seeing illegal, I'm seeing illegal. So it seems the general consensus is that tax evasion is illegal. So let's go to number two, tax avoidance. Is tax avoidance legal or illegal? Tax avoidance. Oh, people still think that tax avoidance is illegal. That's good. Someone says, are they not the same? They're not the same. So tax avoidance, or someone says legal but not ethical. Someone says legal. Mixed reactions here, okay? And then you say that tax minimization and tax deferment. So let's jump into the answers. So you can see that everything we have here, evasion is deliberate, it is illegal. But avoid, let's focus on the presentation. You see, if I plan my tax affairs to reduce the taxes I would have to pay. It is not illegal, but what many countries have done is to include what they call that, oh, I want to, because I want to take advantage of the, let's say I'm in Nigeria and I want to set up, a holding company somewhere. And the holding company, I want to set it up in a country that has a low tax rate. And I go and set it up there. And then I start moving all my profits to that country because their tax rate is low. The tax authorities will lift the veil and see that, oh, I'm doing this to avoid taxes, okay? Or I decide I have one arm of my company that's making profits. I have another arm that is I have another business that's making losses. And then all the expenses that I should take that should be going to the loss-making company, I'll move it to the profit-making company because I want to, optimize those costs and reduce my profit on which I'll pay tax. In that situation, someone will say, but these expenses are for your loss-making company. Why are you moving it to your profit-making company? So schemes like that can then also create an issue for you, especially when you're looking at transactions with related parties and the rest. Minimization is legally arrange your tax affairs to reduce the amount of tax you pay. There's like a crossover between avoidance and minimization. And then deferment. I can also decide not to pay my tax immediately as long as I'm within the time frame and pay it at the end of the period and when I'm meant to pay it. Let's say my tax is due in 6 months. Why do I want to pay it now? I'll just pay it in 6 months. Or if I decide that, look, you know what? I don't have enough money. The money I have now, there's a lot of things I want to do. I can decide I won't pay my tax now and I can pay it in 6 months' time or in 1 year's time, even though you know that there'll be penalty and interest. But some companies look at it, or some individuals look at it and say, well, the penalty and interest I'm going to pay for paying that tax late, if it is less than the amount of profit I will make or the return on keeping this money and using it to do other things, then I could take that option and defer paying the tax. So these are ways that some companies also decide to manage their tax affairs, either through avoidance and minimization or deferment. But evasion is wrong and illegal. So I have an icebreaker because we've been talking tax. So can someone tell me which month has 28 days? Which months have 28 days? Which months with an S? Stephanie seems to be correct because every month has 28 days. I'm going to ask the second question. What common 11-letter word is always spelled incorrectly? What common 11-letter word is always spelled incorrectly? Oh, I see the answers. I hear it correctly. What is in seasons, seconds, centuries, and minutes, but not in decades, years, or days? Yeah, we've answered the incorrectly question. I'm going to ask the 3 questions together. What word starts with E and ends with E, but only has 1 letter in it? And a word I know, 6 letters it contains, remove 1 letter and 12 remains. Who am I? I'm going to jump to the answers. All these questions. Rebecca, let's move back. Let's move back to the presentation. Oh man, I can see I have a very interactive queue. I have a very interactive group here. So let's jump back to the questions envelope. Okay, so who is subject to tax? Okay. Now, the people that are subject to tax are individuals, sole traders, joint ventures, partnerships, families, communities, non-residents, and you. I should add an I as well. Everybody, all of us are subject to tax. And individuals, we pay tax as individuals. If we have a sole proprietorship, we pay tax as sole proprietors. If we're in partnership, we pay tax as individual partners. You know, you could have a family business that pays tax. Non-resident individuals and companies also pay tax, and you have to pay tax. So if you look at corporate entities, you would have incorporated entities, limited liability companies, and unlimited liability companies. Government corporations that are set up with a charter to pay tax. Branch operations. So some countries have recognized branches. So many of the Francophone African countries, I mean, I would say all the Francophone African countries, if I remember, have a branch, recognize the branch of an entity as a legal form. Representative offices, online companies, non-resident corporations. So corporate bodies all pay taxes depending on how they are set up. So these categories of taxes, I would say that not just in Nigeria, but I mean, across Africa, you would have these categories of taxes across Africa. There are taxes you pay on your profits, right? So those profits are, it could be profits as a small company, it could be profits as a large company. It could be a special type of profits tax. So if you're in the petroleum industry, you pay petroleum profits tax. As a, if you're not in the petroleum industry, you pay companies income tax. You know, someone says, at what point or revenue level does a small fashion business start paying taxes at federal and state level? So the thing about it is depending on the country you're in, right? So if you're in Nigeria, for instance, and you know, you would have to hit a certain turnover threshold for you to be able to be liable for taxes. And then it could also be, you know, it's just different countries have different thresholds. So it depends on what threshold you have in your country. So you would have to look at your local laws to know what is the threshold for you to start paying taxes on profits. But you would find out that there are some taxes that you'd have to pay irrespective of your, the size of your business. So for instance, it could be property taxes. So taxes levied on acquisition, disposal, ownership, or use of tangible and intangible property. So you could have capital gains tax, you could have radio taxes, TV licenses, vehicle licenses. You pay those things whether you are a big company or a small company, right? So the thing about it is that property taxes would apply to you, but it could then depend on the value of the property that would then drive the amount of taxes you pay. There are people taxes. People taxes are the taxes you pay on employment. So personal income tax, your social security. But remember that personal income tax in some countries could also apply to you that you have maybe a registered business name, would pay that personal income tax, okay? Then there are product taxes, which are taxes on goods and services, customs duties, excise duties, value-added tax, and the rest. Those are good taxes you pay on consumption, really. That's essentially what it is. You know, if you consume a good or if you consume a service, you will pay that tax, okay? In some countries, you have a threshold under which you can charge this tax, because it's not always about paying, but it's also about charging. So some countries have thresholds on which if your revenue is not at a certain threshold, you don't have the obligation to include some of these taxes. Now, you know, we've talked about these taxes, and if I use Nigeria as an example, you know, corporate taxes, I've talked about petroleum taxes, value-added tax, withholding tax, the stamp duties, customs and excise duties, personal income tax. These are taxes at the federal level. At the state level, you would have personal income tax, you know, for the state where you're a resident, withholding tax for individuals, partnerships, and trusts. And for the provincial or local government, you'd have road taxes, radio licenses, bicycle taxes, etc. This is using Nigeria in Ghana, you probably have different taxes at different levels of government. In Kenya, in Botswana, you just have to ask yourself, where do I fall into in these buckets in my country? So we've talked about the need for taxes, and we've talked about post-COVID, declining revenues, increased debts, significant infrastructure deficits. Now, for those of you who are in Nigeria, if you look at the role of the tax authorities, you'd find out that, it's to assess taxes. So tax administration, what they are going to do, it depends on your country. That's why I say, we're using Nigeria as an example. So the person asking for bicycle taxes, some of these taxes are collected at the local government level. In my view, many taxes that are there are redundant and need to be extinguished or collapsed, because multiple taxation is a thing I believe is a big issue for us in Nigeria. And that's why, many of the things we need to look at is how do we influence legislation to start reducing the number of taxes that businesses pay. So yes, you look at assess. So we assess taxes, we assess you to taxes, meaning that we give you a tax assessment. The tax administration also accounts for the taxes, and they also enforce. And so many of you who are in countries that have aggressive tax authorities have also suffered tax enforcement, and then they also collect taxes as well. Okay, and if you look at it from a Nigerian standpoint, you'd have a joint tax board that kind of brings together everybody, and then you'd have the state internal revenue services, the federal for the states, there are different state internal revenue services for each state. There are different, local government revenue committees for each local government who collect the local government taxes. And then there's Federal Inland Revenue Service to collect the federal taxes. So depending on how I remember back in Tanzania, when back in the days when I used to cover Sub-Saharan Africa for a multinational, and I used to have to travel to many countries to engage with the tax authorities. So Tanzania is one country I remember, Congo, DRC, where we had kind of regional tax authorities that we had to deal with, or tax authorities that are set up depending on the size, right? It could be tax authority for large taxpayers. It could be tax authorities for small taxpayers. So there are different, ways that they are set up, to engage with taxpayers, okay? And this tax administration, this list, so some countries have different legislation that gives effect to the different taxes and who should collect it. So if you look at Nigeria, for instance, these are the approved taxes for collection by the federal government. If you look at taxes approved for collection by the states, these are the taxes that are collected by each state, and there are 36 states in Nigeria. So each of these states has the right to collect these taxes. And then there are the taxes that are collected by the third level of government, and this is the local government. So these are taxes that are approved for them to collect. So the good thing about this is, please, depending on your country, know who has the right to collect tax from you, so that you don't have illegal tax collectors coming for you for your taxes. So it's also very good to understand what tax am I due to pay, and to which tax authority am I meant to pay? Who is my provincial tax authority? Who is my regional tax authority that I'm meant to pay to? You need to understand that, understand the taxes you're meant to pay as well. Local government, they have so many taxes that they can collect. So if you look at the tax administration structure, so if you're looking at a Nigerian company, the Nigerian company has, look at it, 1, 2, 3, 4, 5, 6, 7, 8. There's so many taxes that they have to pay, and so many different tax authorities that they have to deal with. So you'd find out that you'd have to then start considering what, I mean, it depends on which country. There are countries that have taxes on gifts received because it's seen as a benefit that you've received. Okay? So why are we talking about all taxes and not to focus only for tax that we pay as a company? I'm sorry, Jian, you must realize that as a company, you have so many taxes that you have to pay, taxes and levies. It is not only the tax on your profits that you have to pay. Depending on the country you're from, you would have so many other taxes and levies that you have to pay as a company, whether you're paying it on behalf of yourself as a company or on behalf of your employees. So please, let's be clear. Let's be clear in our minds that this is understanding taxes. So it's not only taxes on profits that we are talking about. I hope this answers that question. So if you look at a Nigerian company has so many other taxes and levies it has to pay, and this is not even exhaustive. So let's look at some of the tax regimes. I've tried to make it as broad as possible for different countries. So I'm going to start with Nigeria. You pay tax on your profits, companies' income tax at the rate of 30%. Filing is due by 30th June for some companies, and for other companies that are maybe in the petroleum industry, it will be 30th of May, okay? There's value-added tax. Now, value-added tax in Nigeria is actually at 7.5%. This is an error and will be corrected. And pay as you earn, there's actually no tax called pay as you earn, it's personal income tax. Your personal income tax is dependent on your income level. So it is a graduated tax rate, but your effective tax rate, for incomes at least above 300,000, I'd say it's somewhere around 17 to 18% effective tax rate. There's withholding tax. Withholding tax is actually 2.5% to 10% in Nigeria. I do apologize for the numbers you have here. There was a mix-up. It's actually 2.5% to 10% in Nigeria. So I think this may have happened in the when the slides were being moved around. Can I ask that I may have to go back to my own slides and not these slides. So I'm going to have to stop sharing and go back to my own slides if you don't mind. So I'm going to stop this share. Okay. That's Botswana at 22%, which is one of the lower tax rates you'd see. And just one thing I want you to also get from this, that you'd find out that the tax rates are pretty much ranging around the same on a country by country basis. Some outliers like Botswana might have a lower tax rate of 22%, but you'd find out that some other countries go as high as 30, 35%. So the next thing I kind of wanted to touch on was tax planning and compliance. You need to plan your taxes. You need to plan for your taxes. If there's nothing you take away, if there's one thing you must take away from this presentation is tax planning and compliance. Tax planning and compliance is essentially just being able to plan for your taxes ahead. If you plan for your taxes ahead, you'll be able to then manage your tax compliance and payments and also your exposure. So, tax planning involves tax function effectiveness and efficiency, and some tax avoidance schemes that are legal and within the ambit of the law. Okay, and it's an effective tool for business objectives, right? I think we've talked about avoidance and evasion. The difference is the thickness of your freezer wall. Tax optimization versus tax aggressiveness. So if you look at that, right, tax optimization, it aims at reducing your fiscal obligation. It takes advantage of legitimate concessions and exemptions in the law, and it involves the process of organizing business operations so that your tax obligations are optimized at their minimum amount. So I ask myself as a fashion business, what do I need to do? I can use the example of Nigeria. For me, tax planning can be that my turnover is 18 million naira and as an individual, and I can decide I want to go and set up a company because I know that my turnover will range between these amounts. So why not set it up as a company? So for the period within which I'm growing, maybe from 5 million to 10 million to 8, before I get to pretty high revenues, I would not be paying taxes. So I could set myself as a company and not be paying corporate taxes. Or as my income is increasing, I'm not paying tax at 30%, I'm paying at a lower tax rate of 20%. And by the time I get to 100 million, I would think I'm a big enough company to be paying 30%. I've just planned my affairs and set up my company in a way that allows me to take advantage of the tax law. That's all. But when you're aggressive, that means you're being drastic around the way you want to minimize your taxes. You're taking tax positions that are most favorable to you, that may actually be open to interpretation. And then looking for forms and alternatives to get your most tax savings, right? The whole essence of being aggressive is that it will get you into trouble. Some people can then decide, my whole life, everything about my life is being paid for by the business. Okay? Then if you're aggressive, you can then say, I've decided to buy myself, some crazy things and charge it to my business. Now, yes, you're trying to bring in the cost of all those things into your business, and you then find a way of saying it is a business expense. People will start looking at, well, if it's a business expense, why are you spending such a big amount on, let's say, I don't know, your personal expenses or MD expenses, and you're saying it's a business expense. And they then start looking at it and saying, does this make sense for you to pay 80% of your revenue as your personal expense or 90% as your personal expense? You've been aggressive to take a 90% deduction so that you can only pay tax on 10%. But in that aggression, does it make sense? Can we, if someone looks at a similar business to yours that has a profit of 40%, yet your own profit is 10%, one will start wondering, what are you doing that may seem correct under the law, but with closer scrutiny would seem to be being aggressive in how you're taking deductions for costs. Okay? So you have to just be clear in your mind that if you're optimize your taxes without necessarily being overly aggressive. And that's why we bring in things like tax morality, and which is you need to pay your fair share of tax to the government. Government may not always do the right thing for you in terms of what they provide to you, but you have to pay your fair share. And if you don't pay your fair share, you will be in trouble with the same government that you're saying is embezzling and spending all our tax money. And you have to start looking at, in evaluating your fair share of taxes, what do we need to look at? We need to look at the income that you've earned. We need to look at the taxes you paid by comparable companies. Remember when I said, if you have a company that can be compared to you, you're always paying, like I always have this problem as PwC. If I look at the amount of taxes I am paying as a PwC employee, and I compare it to what other people are paying, I know that there's significant lack of morality in other companies because they are not paying the fair share of their taxes, either as companies or as individuals, right? And obviously, if you look at some of the cost savings you get from the amenities the government is providing to you, you could then say that, my goodness, the government has built that amazing road that passes in front of my business and allows people to come without having to park their cars 1 kilometer away to walk to my shop. Now, if government has built that road, yet I'm not paying my fair share of taxes, that is wrong. You should be able to then say, I should pay my taxes to contribute to what government is doing. So if you look at it, right, essentially you're saying you need to understand the background to the facts of what you're trying to do when you're trying to do tax planning. You need to conduct, is it a reasonable thing that I'm doing? Am I taking reasonable expenses? The fact that I'm deciding to take this income out, is the income I'm reporting, is it reasonable? You know, consider the applicability of laws. So you have to look at the relevant legislation to be clear in your mind that you're able to do this. You have to consider the application of, if you look at judicial precedent and the rest, you have to align what you're doing to your business objectives, and you have to consider the tax morality. Am I paying my fair share of taxes? So there are many options you have, you know, under, you know, like the choice of your accounting period, carrying forward of tax losses, filing tax returns on time to take advantage of early filing bonuses, you know, ensuring that you have things like cost reimbursements, you know, which can actually reduce the cost to you as a, we can reduce the amount of tax you would pay. So for instance, if you have reimbursable expenses, there are no additional transaction taxes on reimbursable expenses. So just note that when you're getting invoices from people that say they have reimbursable expenses, you know, depending on also how you account for your taxes, whether you're accounting for it on a cash basis, meaning that you only account for the tax and pay the tax when you collect it, or you account on an accrual basis, meaning that you're accounting for the taxes immediately you raise an invoice. The difference in that is that if I raise an invoice and account for the tax immediately, versus if I pay the invoice, or if I collect on the invoice and pay the tax, it could actually have a time value of money for me, okay? Or pay your taxes in installments. There are all sorts of things you can do around planning. Now, tax consultants. You have to ask yourself, do I need a tax consultant? And I would say yes, you do, no matter how big or how small you are. In fact, in PwC, what we've done is that we've set up some sort of consultancy for small companies and small individuals in the creative industry. And what that consultancy does for you is just to focus on compliance and tax advisory for you. And the thing about it is that the more people we bring together, the more the unit cost drops. So it is okay. So if you have, many people would say, oh, big consultants like PwC, no, I cannot pay. But the truth is, you have to find out, do these consultants have anything for SMEs, small and medium scale enterprises? If they do, then you take advantage of those things, because you could actually sit down and have a PwC, for instance, giving you tax advice. And they can give you tax advice on anything. They can give you a consultancy on setting up your business and everything. And because they are doing it for SMEs, they'll give it to you at an SME cost. So you must have a consultant that has a good client base. You must have a consultant that is a good communicator. If you're not a good communicator, you cannot be a good consultant. You have to be a consultant that works closely with your people and encourage ownership of the solutions. I can't come and tell you I know your business better than you, but I can come and tell you that let us work together to get you a better solution, bringing my expertise and your knowledge of your business. I'm also, a consultant should also be able to give you the right direction on how to move forward so that you're able to grow your business. You know, accessibility. You know, me as a partner today, people call me at odd times. You know, people call me every day. Chijioke, please, we need this, we need that. Your consultant has to be accessible. Your consultant needs to understand your business and must be technically competent and constantly updated. Your best advisor is the one who saves you whatever currency you spend, okay? And at this point, I'm going to stop. I think we only have 14 minutes to take questions. And before we take the questions, I'm going to ask Labake if we have the first person that joined this call. I want to know who is the first person that joined this call, because I have a special gift for the person.
Thank you very much, Chijoke. So yes, we have the name of the first person that joined the call, and the person's name is Moyosore Awopikba. Moyosore
Okay,
Awopikba.
so now, Moyo, sorry, I was meant to be paid a honorarium of, I believe, $250.
Yes, $250.
I was meant to be paid a honorarium for doing this for $250, but I refused to take that honorarium because I believe that we are giving back to the creative industry, and I believe that the creative industry is one that needs the right level of direction and support from companies like PwC. And therefore, I would like to present on behalf of the partners, my honorarium to you, Moyosore. Sorry, what? Moyosore.
Moyosore, yes, Moyosore Awopikba.
Moyosore, congratulations for winning the $250 prize. So now moving on to questions. Any other questions?
Okay. Hi, Chijoke.
Yes, please.
Okay. This is Wamaka. There's a question I think she should take. Someone mentioned that if she has an accountant, why does she need a tax consultant? So I want to leave that question for you.
Okay, that's fine. I'll take that question quickly. So the truth is, depending on the size of your business and the capacity and competence of your accountant, if your accountant is competent in tax matters, then by all means, your accountant can do your tax compliance. So not only will the accountant do the accounting, but also do your tax filings. What a consultant can now do for you is to now bring added value in terms of tax planning, in terms of tax optimization, and in terms of engagement with tax authorities on your behalf. The gravitas and the clout that a PwC will have as a consultant, and I'm using my firm, will be different from the gravitas and the clout that your accountant will have in dealing with the tax authorities. So again, I've said it, what would work, and I will always tell the industry, come together as a group and then seek out one of the big consulting firms and say, can you treat us as a group and treat our members to your specialized services in SME? So if, for instance, 50 people in the fashion industry, I'm using Nigeria as an example, come together and say, PwC, give us services to 50 of us. Then what you would do is that you will then be able to take advantage of strength in numbers. And that is what you need to do because you all are growing together. I like what CC Hub is doing as well, bringing you all together and driving your growth. But you then need to ask yourself, if you then are in a cluster like this, it is easier to get services that are value adding as a group and not as individuals, because you may not be able to afford it and it may not be worthwhile for the consulting firm to work with just individuals. But that doesn't mean you can't work with consulting firms as individuals. It's just that at times it's better in numbers, but as an individual, you can then come and say, if you're on an SME package, please can we take advantage of it as well? So you can use your accountant for accounting and compliance, but if you're now looking, depending on his level of knowledge and understanding, you may need to bring in someone with a bit more knowledge and understanding to take you forward.
Thank you very much, Chijoke. There's a question here, and the person says that at what point does a small fashion business start paying tax?
I answered that question.
Okay.
I answered that question because I said your small fashion business. So some of these questions I answered during the call. I said your small fashion business, if you have to pay taxes for sewage or property taxes or the rest, you start paying it from day one. Or if you sell an asset, you have to pay the tax on the sale of that asset. Okay? So it depends. Down in terms of profits, it depends on the country. Like we talked about Nigeria, who have a small company tax regime. It could also be Ghana or Tanzania or any other country might have a tax regime for small companies. Okay, so it depends on your country, but what I can tell you is that every other taxes on consumption, you must pay whether you're small or big. But tax on your profits will depend on the tax regime of the country.
Thank you. There's a question here in the chat box. When is it advisable to move from simplified tax regime where you only pay 5% of what we sell and we don't deduct what we pay when buying products or services to a value-added tax regime where we add 17% to the price, canalize, I didn't get this, but that monthly to authorities and
Difference back. So,
yes.
Well, it depends on, I think, maybe a simplified, like countries like Cote d'Ivoire have a simplified tax regime. Many of the Francophone countries have a simplified tax regime. The truth is, it depends, right? It depends on the country.
Hi, Chijioke. Sorry about that. I guess Chijioke is having network issues. It's going to join us shortly. Thank you.
All right. Hello.
Hi, Wamaka.
Okay. So I think that's on Aline's question, right?
Yes, Aline's.
Okay. So I think what Chijioke is saying is that it depends on the country. The movement from simplified tax regime to another method not every country has that. Like for now, we're expecting Nigerian taxes, and Nigerian tax doesn't have simplified regime for VAT. It has rules for VAT. I know Nigeria and a couple of other West African countries have VAT rules. It will depend on where the transaction is coming from. It depends on the type of goods, type of services. So there is not just a one answer fits all. So that's why we're also saying that tax consultants are important, because as businesses, we know you're focusing on your growth. You're focusing on how to make profits, how to handle your costs. So tax consultants can help you because they'll bring in the specialized aspects, things that you don't look at every day. Like I might not expect someone here, let me say Messi, to every day you pick up the newspapers just to read about tax issues, but a tax consultant does that every single day. So that is their core work. So that's what it's just saying, that it depends on different factors.
Can anybody hear me?
Yes, we can hear you now.
Okay, sorry, I don't know where I lost every guy, but I said most countries have a simplified tax regime that unifies all your taxes into one. Okay, but it depends. If you now move to the other tax regime that then speaks to the normal taxes, you will then pay tax on a graduated basis. But a simplified tax regime allows you to pay tax based on a single tax rate, on a flat tax rate for your income, and it's not graduated. Now, if you move from the simplified to the regular system, depending on which country it is, like I said, many of the Francophone, many of the Lusophone as well have it. Then if you move to that, you would have to pay the taxes at the level that the law requires you to. I don't think you can get a refund if you move from one tax regime to another, because you're now subject to that new tax regime.
Okay? Thank you very much. Okay,
but I think Wamaka also mentioned that your tax consultant is the one that will help you to be able to speak to this if your tax accountant or your accountant doesn't have that skill or knowledge.
Thank you very much. Somebody is asking a question. Is CIT due end of each year, like December or is in January?
I answered that question as well. I said CIT is due depending on your year end and what the law requires. That is why when I talked about Ghana, could be 4 months after year end. Nigeria is 6 months after year end. But if you're a petroleum company, it would be 5 months after year end. And the question someone else asked before was, do I have to have the government year end? And I said, no, you can have a year end that, aligns to your business requirements. Your year end can be September, but that would mean that 6 months after September, you must pay your company's income tax. Meaning that if your year end is September, you must pay your company's income tax by March of the next year.
Thank you very much, Ejoke. Somebody is asking a question in the chat box. I work from home. Do I need to pay tax?
That's a fantastic question. And yes, you do have to pay tax because you're working for yourself, meaning that you'd have to pay personal income tax on the income you earn. So that's why I said, please be clear in your mind. What are you? Are you a company? Then you would have to pay tax on the income you earn working from home as a company or a business owner or working from home as an individual. One of the issues that has come up is if I am doing remote work. So let's say I'm doing graphics design for a fashion house in Milan, and I'm doing graphics and I'm drawing for them, and I'm sitting in Nairobi doing that. The fashion house in Milan will not be able to, oh my goodness, can you hear me?
Yes, I can hear you.
Okay, so the fashion house in Milan cannot pay my taxes in Nairobi for me. So I would have to now, on my own, go and self-account for taxes to the Kenyan Revenue Authority. But the question is, how many people are willing to do that? If you collected, if you paid your dollars for sitting at home and doing remote work, how many of you are willing to go and file a tax return to the tax authorities? And that's why we say, don't make the mistake of not paying and filing your taxes because you are deceiving yourself. You actually don't know how much your profit is. For you to know how much your real profit is and to know how successful your business is, you need to take out the tax to then know what your real profit is. But if you've been operating without paying taxes, without paying tax on your profits, without paying consumption tax or value-added tax on the services that you enjoy, you'll never know how much the cost of the service is. You'll never know how much profit you make and whether you are really a profitable company or not. You say, oh, my profit is, I don't know, I made $100,000 in profit last year without paying taxes on that profit. If you think about it, you had paid the taxes on that profit, your profit maybe should have been $60,000 or $70,000. But you're holding yourself as a $100,000 business. When I now come and do a due diligence, many of you are bringing in investors. When investors come and look at your business and find out you're not paying taxes, you're not compliant, you will lose out. So my last words to everybody is this: be compliant, act like a big company, act as if you're a big compliant company. If you start that now by setting your business operations, setting your accounts, your finance, and your tax, it becomes a part of you. When you pay your tax, you're able to then estimate how much profit have I made? What is the real profitability and how well is my business doing? If you don't do that, trust me, when you do become a big company, you will struggle. You will struggle and you will not do well. And then when investors come to invest in your company and they ask, where are your records? Where are your finance accounting records? Where are your tax records? And you don't have them. And then you're saying, oh, the valuation of my company is 1 million rand. It can't be 1 million rand when you don't have the books to back it. I don't know how much tax you owe. What if I take over your tax? They're going to be acquired by companies. You're going to sell down your companies. You must be able to get the right value of your company. It may be painful today.
Oh, sorry about that. Our facilitator is having network issues, but I'm sure you have really gained a lot in the course of the session. Let's wait a bit to see if he's going to join us. Hi, Wamaka, do you mind to say one or two things? Spending the time to Chijioke will join the call.
All right, I was just looking at the questions here. I'm actually very happy that people followed through. That's good. I think some people are asking about the pattern of examination. So I know you give them feedback on that. Then from what Chijioke was just giving his final words, because I think we're almost done with today's session. And then Oluwa Dunsi, no, taxes are not tight. Then there was one other question that someone asked. I think it was in French, that if you do not master the tax process, what are the appropriate services that you should contact? So that is still similar to someone else's question about using tax consultants and networking. So that's why here is important. Okay, Chijioke, are you back?
I think we may have to close the session.
Yes.
Can I ask that the questions, if you can all hear me, can I ask that CC Hub can, the Creative Economy Practice, I always make a mistake. They can compile the questions that haven't been answered, and I will send you responses on that.
That's fine, that works. That works, we'll do that.
Okay.
Thank you
Because I actually
very
did
much.
have a hard stop.
Thank you very, very much, Chijioke. That was such an enlightening session. And thank you, Wamaka, for being a huge support in the course of the session. So we would like to call it a day. And I would just advise that Chijioke has been benevolent enough to give us a soft landing by answering your questions after the session. So please, if you have any questions or your questions were unanswered in the course of the session, kindly send us an email at fashionomicshelpdesk@cchubnigeria.com. Please ensure that you do that between now and 10 a.m. West African time tomorrow so that we can have enough time to collect the questions and forward them to Chijioke. Please ensure, take note of the time. If you have any unanswered questions, do that now, between now and 10 a.m. West African time tomorrow so that we can have enough time to collect the questions. Any questions that come in late into the weekend, I'm afraid we will not be able to forward your questions to Chijioke. Thank you once more, Chijioke. Thank you, Wamaka, for such an insightful session. I am sure the participants gained quite a lot, and I can see the comment button in the comment section. And congratulations to Moyosori Awopegba for the cash prize of 250 United States of America dollars that was won today in the course of the session. So our sessions continues next week. We are going to be having a session on Tuesday, Wednesday, and Thursday. Information regarding your exams will be shared on the WhatsApp group, and every necessary information that you need in the course of the week will be passed across to you. Thank you very much, everyone, and thank you for making our time to join today's session. I am sure it was worth your time and was quite insightful. Thank you very much, Chijioke, once more, and thank you very much, Wamaka, for the time and for the effort that you are putting into making today's session a success. Do have an amazing time, an amazing weekend, and please note, if you have any questions, you have any complaints, you are having issues with the Moodle platform, you need any important information, please do well to send us an email at fashionomicshelpdesk@cchubnigeria.com, and we'll be more than happy to respond to you. Thank you very much, and we look forward to receiving your questions, and we look forward to answering any complaint that you have. Do have an amazing weekend, and see you next week.